Welcome and good morning to everyone. My name is Barbara Buchner. I'm the Global Managing Director of Climate Policy Initiative and a very, very proud and happy partner of the FIX Lab here today. And without further ado, I'm actually going to pass over and introduce our keynote speaker, who all of you obviously know is Adama Mariko, is the Secretary General of Finance in Common. So the floor is yours.
Good morning, everyone. Good morning. Yeah, you are at FIX. You gotta keep the energy going. All right, thank you very much. I'm gonna be very short. I know that the day is long for many people, and we are very proud to welcome you all. Actually, we have welcomed more than 2,000 people from the beginning of FIX. And yeah, I may say there is a strong community of public development bankers in the room and within the venue. So far, we have people from all over the planet. More than 100 countries are here. We have more or less 500 public development bankers around, and also many people from private sector. I was very surprised, actually. We are way more in the private sector engagement than what we had last year in Cartagena. And indeed, I want to also thank all the international organizations that are with us here, civil society. So this year's summit, we just wanted it to be a place where we demonstrate what we do as public development bankers. And you may have the feeling while you are walking into the venue that you have places where people are pitching their projects, concretely speaking about what they do. All the stands you are seeing with the partners, it's not just to speak about what is this institution doing, it's mainly how they collaborate with public development banks, how they will showcase and demonstrate what they're doing. You even have the Finance in Common Arena, which also showcase how public development banks invest in sports, arts, and culture, being beyond the typical subjects we know regarding infrastructure, etc. So it was also a summit in which we wanted to innovate in the approach of even doing the summit itself. So innovation is really key to us. Last year, the conclusions of the Finance in Common Summit was about how do we go to be more, solution focused within this community, because you have several events, but at least to showcase year by year how we are, evolving as a, public development banks group, indeed implementing the joint declaration we have. So regarding the thematics of today's discussion and the Innovation Lab, I want to first of all thank CPI and IDB for their strong support throughout these 18 last months. We were very proud to launch the FIX Innovation Lab in May, in margin of the G20 in Rio, and to see that we came in, at fruition on really implementing and helping new innovations to grow. You may know that in the Finance in Common community, we are speaking about 530 public development banks. And that's a huge number of international institutions, but also local, banks, subnational institutions, national institutions. That are the bulk of this community. 90% of the public development banks in the world don't have any international activity. They work in their national ground, serving their national priorities, reducing poverty, creating jobs, and enhancing growth and hopefully sustainable growth. So that's why we wanted also to connect this community with, the international institutions that have, the more capacity, and sharing that capacity is what the FIX Innovation Lab is about. We had 4 thematics that were really key, and since Cartagena, CPI, and IDB were also helping on making those to work. One is how we help, having more understanding of all the innovation we are seeing regarding debt swaps, regarding also, the CRDCs, to help the public development banks understand those innovations and implement them and scale them even at a national level. But thematics like local currency problematic, which is huge in the development banking community, is really also a priority that has been set in how to help national development institutions implementing new solutions that can be also replicable and scalable. Just that to say that within the Finance in Common coalition, all of you, beyond the discussions, we want to see how we serve typical issues, deepen those issues, discuss them technically within the thematic coalitions, sharing different strategies, discussing norms, discussing business models among public development banks with the help of other stakeholders. And that's what we are seeing now. And that's also a beginning, and we should all keep running that process. So capacity building and innovation within this discussion is what is about. So I know that you have a strong program, but my only call here is that when we start today with the incubation process of new innovations, that we don't stop with that success. Really, we should keep widening that, and it means that each institution that have a good idea, please share it, because we think that we have here, the potential of scaling those ideas and just make it, for the benefit of the other institutions. So I'm going to stop here, but welcome you again within Finance in Common. Keep the good work, and we are very proud to have you all. And make sure that anything goes out of here is in the good hands, and we'll really take care about scaling up, showing it up, and also to the big tent right next to us, which is the G20 finance ministers and central bank governors. They are really demanding on also seeing what's happening, what the public development banks are bringing in the discussion, and we will definitely share that with them. And I think it will be good for all of us. Thank you very much.
Thank you so much, Adama, and thanks for the great collaboration. And just for your information, we will have 2 sessions in this panel here, which will cover all the 3 pillars of the FIX Lab, which expand beyond knowledge sharing, policy dialogues, to real innovation, to our incubation pillar. And we will be announcing the 3 winners of this year's FIX Lab Incubator contest in the second part. So stay tuned. It's a fantastic set of organizations that will be working, that we will be supporting to make sure that we have action on the ground and that we don't stop what we have now, but really continue to demonstrate and showcase. So this first session now will look at how public development banks can drive innovation through knowledge sharing and policy dialogues, which again are key pillars of our FIX Lab and of the lab's working groups. As Adama said, there's over 500 public development banks worldwide, each of them obviously with their own mandates, their own challenges. But I think what particularly this summit here has shown, but also the work that we have been following over the last years, is just the immense potential and opportunity that these banks have to further drive climate finance through innovation. So we'll be looking at a number of areas, and I have a fantastic panel that will be doing that. I'm sitting on this side, so I can have a very good look at them and listen very carefully. But let me just very briefly introduce my panel here. We have Julissa Vasquez Segura, who is the Secretary General of the Development and Export Bank of the Dominican Republic and Chair of the FIX Lab Working Group on Currency Risks. Welcome to you, Julissa. We have Ijeoma Otulumba, who is the Executive Director of Finance and Corporate Services of the Development Bank of Nigeria and Chair of the FIX Lab Domestic Carbon Markets Working Group. Welcome. Great to have you here. We also have Shilpa Delaval, who is the legal lead at the UK Expert Finance and member of the FIX Lab Climate Resilient Debt Clauses Working Group. Welcome, Shilpa. And last but certainly not least, we are very pleased to have with us Ariana Di Iorio, who is the Global Director of Financial Institutions, MIGA. Again, a very good partner, and we very much look forward to strengthening this partnership through the FIX Lab as well. So with that, to kick off discussions, I'd like to ask all of my panelists actually first to provide us with almost like a snapshot or like an overview of how your institutions, your banks are taking new approaches to addressing the climate finance challenges that we've seen. And I think that the working groups have been very nicely covering some of the key issues here. So maybe Julissa, let me start with you first.
Well, good morning, everyone. I'm very happy to be here with you today. And thank you for this opportunity to speak on the situation of my country, the Dominican Republic. The Dominican Republic is in a unique position right now to reap the socioeconomic and environmental benefits of efficiently and promptly adapting to climate change. However, as with every opportunity, and as all of you know, there are challenges and risks. In terms of addressing the climate finance gap, we are looking at various strategies that feed the needs of our market, but I would like to focus on 2 examples today. At Bandex, we're extensively researching and ideating ways in which we can unlock alternative funding sources for SMEs, which account for 32% of our GDP and provide 61% of jobs nationwide, but rarely qualify for traditional loans due to informality, regulatory constraints, and insufficient collateral. Hence, we're providing funding to nonprofit organizations dedicated to microlending and fostering entrepreneurship to alleviate poverty. These nonprofit organizations not only have a broader reach because they're embedded within the communities that need it the most, but can also significantly scale their reach because they're not subjected to traditional banking regulations. And this leads me to our second strategy that I would like to speak to you about today. We're trying to identify and address policy barriers. Institutional underdevelopment is a crucial explanatory factor in the lack of foreign financing in development countries, and those policies affect both the structure of the economy as well as that of investments. Given that Bandex is a PDV, we're able to closely liaison with the government to both identify and address those regulatory obstacles for the financing deployment across all sectors, both related to climate change as well as the necessary funding to mobilize development change in our country. Thank you.
Thank you so much. I think 2 very important strategies and approaches here, and I think really covering some of the areas where we know more needs to happen, but also I think which are very scalable, as you said. So very, very good to hear from that. But let me go, Ijeoma, to you actually, and I think particularly interested in hearing about carbon markets, of course.
Thank you, Barbara. Good morning, everyone. Thank you for having me on this panel. At Development Bank of Nigeria, we're focused strictly on small businesses. Within the Nigerian context, small businesses form the bulk of the economy, especially on job creation, employment, and it's a good avenue for poverty alleviation. So DBN, just a quick background, was set up by multilateral development partners looking at solving the critical problems in Nigeria, of course, being Africa's most populous country and with a large youthful population. So the World Bank and also the African Development Bank, the EIB, as well as AFD and KFW came together in 2017 to set up DBN. And over the past 7-8 years, we've been able to reach over 700,000 small businesses through our partners, so using our distinct wholesale model to do that. In terms of innovation, this is something that we started right out from the very beginning and even incorporated it as one of our core values. So we have an external focus and an internal focus for innovation. We have innovation challenges. A number of young entrepreneurs have come through that, some in the green space. The first one that we did, just as an example, was a prize for a young man that was building a biodigester and using that for cooking fuel across the country. So we supported that effort, scaling it from prototype to commercial. And also on the internal, our staff will encourage every year an annual innovation challenge. But on specifically on green and on climate finance, we're currently implementing a new credit line from KFW, a 25 million euro credit line. it's going to serve as kind of the seed for the climate fund that we're building within DBN. And so far, we're at the second tranche in terms of disbursement, but we're already beginning to see in our impact evaluation electricity generated through solar mini grids and CO2 saved and so on. Also recently, last year, we got accredited by the Green Climate Fund. So currently, Development Bank of Nigeria is the only Nigerian entity that is accredited by the GCF. We are currently now working on the readiness program to begin to scale that. So I think by COP, we would have very concrete projects in terms of GCF funded and other partners as well. Thank you.
Thank you so much. I think very impressive. Lots of innovation going on, and I think you really walked the talk by, really focusing on these innovation challenges, but really seeing how you can demonstrate pilot from prototype to really kind of scaling up. So very impressive. Thanks so much for sharing. But Shilpa, let me come to you and hear a little bit more about the focus of your work.
Thanks very much, Barbara, and thank you for the invitation today. I think I'll speak from the slightly different perspective. We're not a public development bank, we're an export finance credit agency. And I think it's probably very obvious, but to scale the climate finance challenge from our perspective requires diverse funding models. And that's where I think export credit agencies play a real critical role in mobilizing private institutions and their investment by essentially altering the risk landscape. And I think UK Export Finance is really at the forefront of this, and our efforts in making sure that sustainable trade and infrastructure projects, especially in emerging markets, receive the financial support they need. And a key factor of our approach here is de-risking transactions to then attract private sector investment. We found that, for example, new sustainable technologies and decentralized energy systems often carry a perceived higher risk, particularly in developing countries. And so by being able to offer long-term concessional financing, offer guarantees on loans, we're really ensuring that critical clean growth projects continue to move forward. So that's a lot of part of the things that we're thinking about. And I think maybe to give you a concrete example, we've tried to enhance our the kind of offerings that we provide at UK Export Finance. For example, we now can offer up to £2 billion in clean growth direct lending facilities, which are dedicated solely to clean growth projects overseas. And in addition to that, we can offer up to 18 years repayment for our renewable energy projects, which is, I think it's nearly double more than the typical ECA outlook. So this really becomes quite a game changer when you're looking at large scale infrastructure projects that really need long investment horizons. And I think a good illustration of our work in this area as UK Export Finance is the work that we've done in Angola. We've done high voltage transmission lines. We've done a rural electrification project. We've done substations. So it really kind of shows the kind of work that we're doing with innovation in our finance models. But that all being said, it's not just what you finance, it's how you finance it that matters as well. And we have quite strict environmental, social, and human rights standards that are in line with international best practices, such as, for example, the Equator Principles. And it really means that every project we support reaches these high standards. And I think the ultimate aim for us is to make sure that we're benefiting local communities as well as contributing to sustainable finance as well.
Fantastic. Thank you so much, Shilpa. I think certainly very impressive. I think the types of innovative financing models that you're applying. And I think very important point that actually we do need to use all the actors in the ecosystem. So I think export finance institutions like yours, I think are so important to really help build the sustainable development, but I think with very strong focus on communities. So thanks so much. You also talked about guarantees, which brings me very nicely to Ariana. So I'd love to hear from you as well, your focus.
Sure, Barbara. think when you think about innovation, we need to think about also scale. And MIGA, for those that don't know, it's the guarantee arm of the World Bank Group. And as of July 24, there was a launch of the World Bank Group guarantee platform, which is the unified platform for all guarantees for the public sector housed at MIGA. And for that, the purpose was exactly to be able to channel more investments through the guarantees, to have a better communication interactions with our clients, and clients from both sides, those that are the investors, but also the borrowers. And also looking at how, as an institution, we could break silos, work better together, and provide more solutions. And ultimately, when you think about the bank, you have the IBRD, which is a lending institution with knowledge and lending. IFC, which is the private sector arm that has the investments being debt, equity, structured products. And then you have MIGA as the leverage institution. So, and if you think about our capital, we are the smallest ones, but so far we have been able to do nearly half of the portfolio of IFC, which has a much greater capital, exactly because we're able to leverage. We not only the guarantee itself, but also we use the reinsurance market. And for essentially each dollar that we do, we reinsure 2/3 of it, which make us be much more active and leverage much more our capital. We're to the point that our capital inception in '88 was $300 million, give and take. And today we have a $2 billion capital, 2.1. But historically, we were able to do more than 1,000 projects and issuing north of $85 billion. So you can definitely measure the leverage. So with the guarantee platform, now we can use the 3 balance sheets, IFC balance sheet, MIGA's balance sheet, and IBRD balance sheet, and then combine solutions. And as I'm speaking, we are putting up new projects in place with new structures. And just to give an example, we have a threshold on credit risk, which is BB- for MIGA, but because we don't require counter guarantee. But on the other hand, you have IBRD that can go deeper in the credit risk. So just to give an example, now we are doing structures with, we are actively marketing to do like first loss of IBRD with second loss from MIGA, which can be not only going deeper on the credit risk, but also improving pricing. Another example is to originate to distribute. We've been active. We're also trying to create situations that, yes, you structure initially the project, but then you can actually refinance in a better terms. We've already been able to do this together with IBRD. Portfolio approach, we have IFC very active in SRTs, for instance, and we are trying to set up structures that would work together with them so that they would cover private sector risk, and we would come in covering public sector exposures. Another example of our expansion is the debt for development that's done through our IBRD guarantees. We just did one for Côte d'Ivoire, again, with the savings for sustainability purpose, right? And another part is actually collaborating further with our MDBs, with the network of MDBs, with trying to also MIGA playing the reinsurance side, where we'll help maximize the capital of other MDBs when we can take exposures that are on their, when they have their limits already completely taken, they can pass on for us when we have space, and then they can deploy more in the countries that they are no longer able to operate anymore due to limits constraints. So I'll stop here, but that's the innovation part for us, but it's leveraging, that's the word.
Thanks so much, Ariane. And I think you were all very excited when that platform got got launched. So I think that the scale point that you made, I think the leveraging point is so important. So hopefully more to come. We certainly hear from private investors that guarantees are a way to unlock more and more of their capital. So I think that's certainly a good lesson that we can bring also to all the countries there. But let me come to my second round of questions from my panel here. And let me again start with our working groups and the leads that we had there. I think each of your working groups again had a different topic, but all of them addressed the topic through a common strategy of knowledge sharing and policy dialogue. So I'd love to hear a little bit more. What is is there any best practice or any lessons that you have from your conversations? And Julissa, let me start with you again.
Thank you. Well, it might sound cliche or repetitive in the context of our discussions today, but I believe that the most important lesson that we could garner from the various working groups is that most of the problems that we face are the same. While there is merit in working in our individual issues, I believe we can be more effective if we're working to address them together and we share our knowledge in that sense. For example, in the Currency Risk Working Group, our friends from the Africa Foundation for Development share initiatives related to leveraging remittances to drive development in Africa. The proposed solution that we discussed ideates a remittance platform to challenge the diaspora remittances and their flows to create liquidity pools to offer cost-effective FX hedges that we could aggregate these transactions and optimize their efficiency by combining flows rather than processing each transaction individually. This approach is an approach that we hadn't explored, particularly in the context of our country, but could be very beneficial in remittance-heavy areas of the world, such as is the case of Latin America and specifically the Dominican Republic that has a big diaspora in the United States.
Thank you so much. Again, I think very clear point here. Just like working together is more efficient than addressing the same problem in different contexts. I think certainly lots of lessons. But Ijeoma, let me come to you.
Thank you. So much like Julissa said, the knowledge sharing was also the principal takeaway from the group. We had different speakers coming to share knowledge from Brazil, from Nigeria even, and from the Philippines, from the UK as well. The key takeaway for I think the African carbon market is, which is still in its infancy, is to look at how we can implement the voluntary carbon market, but also leapfrog to the compliance carbon market. We talked about the different challenges, largely on policy, framework, government, regulation. But I think it was heartwarming to see that there is progress in terms of what different jurisdictions are doing. We had an example from South Africa, DBSA as well. And just seeing how uniquely placed Africa is in terms of the potential for using carbon markets to de-risk and reduce the cost of some of the projects that we've had as a tool for development. And so going forward, it's to implement that, continue to liaise with government and policymakers. But this will not have happened without us coming as public development banks to share that knowledge, set aside time to ask questions and find out really what worked in other jurisdictions and how we can situate that within our own context as well, individually.
Thank you so much. I think it's so important, given that there is a timing issue. We need to really make sure that we get to more climate finance at speed as well, not only scale. So I think this enabling the work together to really leapfrog, I think is so important. So thank you so much. But Shilpa, let me come to you.
Absolutely. I think for us, our main takeaway from working with the FIX working group was really the value of dialogue and just having that opportunity to participate in the working group. We're not a public development bank, and so having the views of the African Development Bank, of the Caribbean Development Bank, I think we had Lazards, we've had KfW, to be able to speak with these PDBs has been really invaluable for us. It's really helped us to understand the different institutional perspectives. It's certainly strengthened our approach, and it's also helped us to refine our risk analysis as well with the CDRCs that we have in place, for example. And at the same time, we've been able to share our knowledge. I think we've been very transparent in our working group about the uptake of climate resilient debt clauses, and that it hasn't necessarily been a priority for borrowers when we first engaged on the topic, and it was quite limited in terms of uptake. But, with active engagement, we were speaking with 8 countries, I think. We now have 4 of them which have implemented climate resilient debt clauses, and we continue to engage positively with the other 4 as well. I also think the other benefit of the working group was to be able to share good news as well, and having commitments that we've received from the governments of France, from Spain, from Canada, from Australia, of their commitment to have climate resilient debt clauses has really been quite a nice piece of knowledge to share. But I suppose our conversation has really reinforced the principle that broader collaboration is going to lead to better solutions. The fact that you have knowledge sharing, that you're aligning your strategies, it really ensures that things like climate resilient debt clauses become practical, they're scalable, and they're beneficial as well for creditors as well as vulnerable economies that are at risk of climate vulnerabilities.
Thank you so much. I think that's very reassuring to her. I think you're seeing really the action on the ground that comes from this collaboration, from this knowledge exchange. I think it's so important. I think also that's reinforcing the positive, the opportunities, I think is something that certainly will also help to lead to greater action. But Ariane, let me come to you. Again, you already talked about the platform that you launched. Love to hear a little bit how you are, maybe similarly to Shilpa, thinking about engaging with public development banks, or how are you already engaging with them?
So, Barbara, actually, this is my job because MIGA was, with the launch of the guarantee platform, MIGA also created a sector, a dedicated sector for financial sector, which didn't exist before. So I'm the a global head for financial sector for MIGA, with both sides that, again, from the clients that are the ones that actually acquire our guarantees, but also from the borrowers, which means that it goes both ways. And it's the financial sector, but trade finance. And for us, more recently, actually, we were able to re-enter, for instance, in Brazil. We have Brazilian colleagues here, but MIGA was out of Brazil since 2013. And we were able to do $1.2 billion of Banco do Brasil for conservation and conservation agriculture, which is no-till farming, targeting small and mid-sized farmers in Brazil. And that's what about partnership, because the FI space allows us to not only leverage but because of the guarantees, but also because of the capacity, right? And the presence of Banco do Brasil in Brazil is the largest one. So that's how we can actually have a significant reach. Because MIGA, we're only 240 people. Of course, when you compare, that's about the scale as well. And another good example is BOAD, that more recently we also did $600 million transaction with them, where more than 50% dedicated to climate. Again, with a reach that we wouldn't be able to do ourselves, so the WAMO, right? And with implementing best practice, right, in environmental and social standards. And that's how we can actually multiply our impact, right? It's on these partnerships with FIs. And for us, this is critical. Another good example was also SBI in India, another large player but for solar projects that we were able to refinance and open up space for IBRD to do more with them. So just to give you clear examples, but it's kind of, how can I say, it's a new focus for MIGA on the financial sector, and with the ability of using the 3 balance sheets is to also to be able to do more as a one World Bank group, not only the largest institutions, but also be able to partner up with more regional ones as we use the different balance sheets and different risk appetites. So that's the goal.
Thank you so much, multiplying the impact. I think wonderful just to see how MIGA is expanding and working with more of the PDBs. We're getting to the end to the end of our session here, to the first part of the panel here. But I'd like to have just one sentence from each of you, your hope, what could happen through better collaboration with public development banks, between public development banks between now and COP30. Is there anything specific that you feel I could hope, and again, in the spirit of sharing good news and more optimism here? So I'll go the other way around, and Ariane, start with you.
Well, for me, it's about harmonization, and it's knowledge sharing, but really to have the practice more aligned and standards. I think that will be quite helpful for the entire space. So,
very good point, Shilpa.
I think in a similar vein as well, for me, I think one of the most important things we've seen is that having standardization across loan documentation to make this more market practice than, rather than an exception is really important. I think also expanding our technical support in this area to others will really accelerate the adoption of, for example, climate resilient debt clauses across geographies and across financial institutions as well. And I think also having some global advocacy, I mean, our engagement with G20, with the Paris Club, with the OECDs is, to really push for climate resilient debt clauses. It really helps, I think, with others integrating them, like the World Bank, like EBRD. So I think if we get all of this right in lead up to COP30, I think, we're really looking at a more broader adoption of the CDRCs and then a more resilient and a sustainable financial system.
Well, I certainly hope that we can garner our shared knowledge and also our resources to find solutions in terms of mobilizing local currency into the Caribbean region, specifically solutions that I know can be challenging due to currency risk, but are very necessary due to the fact that this region is composed with various small countries with different currencies, which adds, of course, a layer of complexity that might not be the case in other regions, but it's very much necessary if we want to address the climate finance gap.
Ijeoma.
So between now and COP30, I think from discussion to concrete steps is what I would like to see. And especially for us at Development Bank of Nigeria, off the back of the work that we did with CPI, one of our partners is financing a study that will aggregate all the carbon projects, the projects in Nigeria that have carbon credits attached. So we complete that study, and also based off of our GCF accreditation by COP30, we plan to have some projects that also have a significant carbon credit input. So that's kind of our to-do list going from here. Thank you to the CPI team for the support as well. Thank you.
Thank you so much. Well, I think that's been a really fascinating first part of our session here. Innovations throughout the discussions. I think I've heard about innovation in partnerships, breaking silos, really multiplying the impact, and really making sure that we work together across the whole ecosystem. I think innovation in funding models. We've heard about a number of new and really innovative financing approaches, but I think we need more, like in FX, like you said. Innovation in what and how. So it's obviously how we do things, also what to focus on, sustainable development, very strong focus on inclusive sustainable development, on communities, but also on how the standardization really make sure that we get ultimately to scale and really can help to not stop, as Adama said at the beginning, but continue to go from discussions to really concrete steps. And that actually leads me very nicely just to announcing the 3 winners of this year's first Fix Lab incubator pillar. I'm very excited. It's been like 3 standout proposals have been selected that will receive both financial backing, but also technical assistance to pilot their innovative solutions. So I'd like you to join me in congratulating our 3 winners who are here with us. We have the Uganda Development Bank, which is tackling currency risk challenges by developing a novel risk distribution instrument involving a development-oriented hedge provider and an innovative tail-end guarantee. So it'll be very exciting to see that one getting to the next stage. I'm very happy also to announce the Development Bank of Southern Africa, the BSA, who is conducting critical assessments to establish voluntary carbon markets. Again, one of the issues that have been mentioned here, addressing some of the existing barriers that we see to effective market development. So it will be a very exciting project. And the third one, another very exciting proposal is from the Development Bank of Minas Gerais in Brazil, which is creating a credit and a production guarantee fund to assist local farmers in transitioning to more regenerative agricultural practices. So please join me in congratulating our 3 winners. So with that, I'm going to hand over to Anderson, but I'm going to use this plug very quickly. There is a survey that will help us identify the topics that the working groups in our next year, like from now on, basically will be focusing on. So please have a look at the survey, fill it in. You will help us really shape the Fix Lab in its 2nd year, and this will hopefully then be most useful also to all of you as we continue our work. But Anderson, over to you.
Thank you very much, Barbara. So it's very exciting to have this announcement. And this panel, the 2nd panel, we are going to be able to learn a bit more about the ideas that they have. So I'm looking forward for this 2nd breakout session. So my name is Anderson Caputo Silva. I'm the division chief in the IDB of Connectivity, Markets and Finance. So it's really a great pleasure to be here with you all, exchanging these practical ideas on how public development banks can join forces for financial solutions through innovation, experimentation, now to bridge the climate investment gaps, and how here, as we're discussing, the Fix Lab contributes in this sense. So we have a concrete example here of what we are doing, and it's worth mentioning too that for us is an honor as IDB that we go back to Cartagena and remember that we were promoters of this initiative in the last summit in Cartagena, and now co-leaders with CPI and Fix in this initiative. So we find ourselves here after almost a year and a half, and a lot of progress since then. We just had the first panel with all the discussions. Now on the findings, we are having the 2nd panel with the winners of the Incubator Lab. But without further ado, so let's go and learn a bit what these proposals are about and also have a discussion. I would like to welcome now the representatives of the winners banks of this first call of the Incubator Lab that they were introduced here. But just again, like Luisa Lembe Nogueira of the Development Bank of Minas Gerais. We have in this panel Francis Mwesije. Did I get it right? We were practicing before the panel, so I could get Chief Economist of Uganda Development Bank. Michael Hillary, Group Executive Financing Operations of the BSA. And last but not least, I would like also to invite to join us for the discussion in this panel Hassatou Diop, Vice President for Finance of the African Development Bank, and Peter Quinton, Director, Climate and Development Finance of the Children's Investment Fund Foundation. So it's a rich discussion on perspectives, but let me start with the first questions really to the winners, because we are all wanting to learn a bit more. No? And then the context is that the financial systems, and particularly the national development banks, we're discussing here the role that they can play scaling up financing for low carbon and climate resilient investments. We know, however, that financial institutions face a unique set of challenges to leverage climate and biodiversity finance, some of which are common to the financial sector, others are specific to each context. So now, can you tell us what the innovative idea you have submitted to the incubator lab is about and what barriers it will overcome? And finally, what will be the impact in the end of the day, of implementing the proposed mechanism? So in doing that, like I'm going to start with the Development Bank of Southern Africa. Michael, please, you have the floor.
Yeah, I think firstly, on behalf of the bank, we are humbled and extremely grateful for this. Often we have conversations with people, and particularly here in South Africa, we find ourselves having a deep connectedness to the world in which we live. And you'll find that where people get the opportunity, they'll go away to the wild or the bush. And coming back, having conversations with some of the titans of industry, they'll say, we have this deep appreciation for this world around us. And then we come back into our working environment and we found it quite challenging. So the heart is there to make a big difference, but we found the process quite difficult at times. And this really is where the DBSA has seen this particular opportunity. So what we are really wanting to do is to try and create a supportive business environment for implementing a voluntary carbon market in South Africa. And from that is to then see, how can we scale this into the region? And for us, that's at the core of what we're looking to do. I think some of the barriers are fairly well known. So there's the disconnect between the formal public policy and the voluntary markets, and we're looking to streamline that. What we're also hoping to do through this process really is to find a way how we can make this process easier, and in doing so, we will actually start addressing some of the supply side that we need in the market. Additional issues that we're hoping to achieve is obviously by running with a RAND-based system, is to make it easier for the local markets to be in that space. And I think, finally, what we're hoping to be able to do is, in building this, it will actually make it easier for us to consider accelerated decommissioning of, I'm going to call it legacy energy, and start moving us into new age energy solutions. And that potentially is very, very exciting. I think those are the core. And certainly, I think we look forward to having the engagement with many, many stakeholders as we come up with a solution. And then hopefully we can turn around and say, we've now made this actually happen in a way that we can all say, yes, we have moved down this path. Thank you.
Now, wonderful and promising. Let me pass to Luisa, please. Tell us a bit about your proposal.
Oh, now we go. Yeah. So, good morning, everyone. First of all, I would like to thank for this opportunity of being here in such a relevant event and presenting our initiative. Well, the solution proposed by BDMG addresses barriers in the agricultural sector in Minas Gerais, in the state of Minas Gerais, Brazil. Specifically, it focuses on overcoming the challenges associated with the transition to tropical regenerative agriculture. So just to give a context, in Brazil and not differently in Minas Gerais, Agriculture and land use are responsible for more than 70% of greenhouse gas emissions. So if we want to address this issue, we need to deal with agriculture. We needed a project where we could address agriculture greenhouse gas emissions. So we've been running Lab Agrominas, which is a program structured by BDMG in partnership with Embrapa to foster tropical regenerative agriculture practices since 2022. This program integrates credit lines and technical assistance training for adopting sustainable technologies, such as the use of regional soil remineralizers, natural fertilizers, bioinputs, cover crops, and integrated systems, such as agroforestry systems. And when adopting these practices, farmers build up a fertile and living soil, increase climate resilience and adaptation of food systems while improving soil health, productivity of crops, carbon removal, water and biodiversity conservancy. The idea we submitted to FixLab revolves around the development of a risk mitigation fund. And basically, we propose the development of a guarantee fund that can work either as an income insurance for early regenerative agriculture adopters or as a credit guarantee for farmers that have higher maturity in adopting the sustainable technologies. So by adding the risk mitigation fund to Lab Agrominas credit lines, we come to a blended solution integrating the credit lines, guarantees, and technical assistance training to support farmers in the transition from conventional to regenerative agriculture practices. The key barriers we aim to overcome include the limited financial accessibility for small and medium farmers in Minas Gerais, risk perception, as there's a significant resistance from farmers due to the perceived financial risks of transitioning, particularly concerning the short-term productivity issues. Technical knowledge gaps as well, because farmers lack the technical expertise required to implement regenerative practices effectively. So our program offers comprehensive training and technical support. So far, we have trained more than 1,500 technical assistance professionals and farmers in regenerative agriculture adoption. We believe the impact of implementing this financial instrument will be substantial not only for the local farming community, but also for the broader environmental and economic landscape. Because by encouraging regenerative practices, this instrument will help farmers adapt to climate variability, enhancing their resilience against droughts, irregular rainfall, and other climate impacts. It supports practices that improve soil health, water retention, biodiversity, all crucial elements for long-term agricultural sustainability. The instrument also supports carbon drawdown through practices like no-till farming and cover cropping, leading to a reduction in greenhouse gas emissions. A conservative estimate from Embrapa says the implementation of regenerative agriculture practices that we are stimulating can remove at least 1 ton of carbon equivalent per hectare per year, while also increasing significantly micro and macro living organisms in the soil, as well as the organic matter. And at last, farmers adopt regenerative practices. They will gain income stability through the guarantee fund as well as through a more resilient food system. Moreover, the scalability of this model is a key aspect of its impact. And what we are implementing in Minas Gerais has the potential to be replicated in other regions of Brazil and beyond.
Excellent, Luisa. Very, very encouraging, and wishing that with this opportunity you have all success now in reaching that scalability now, and the impact is really expected is amazing. Let me pass to Francis. Francis, your idea moving to a very different angle, no?
Thank you. I'll also start by expressing our gratitude for being chosen as one of those three institutions that were selected to benefit from this grant, but also to appreciate for the opportunity to present this instrument here and what we shall be doing. I'll start by providing a little bit of rationale and the context to this instrument. So the bank, Uganda Development Bank, launched its climate finance facility 3 years ago. And this was launched to act as a vehicle for mobilizing green resources from both local and international sources to structure deal transactions. So it's basically project preparation, hand-holding of green-related investments. Because again, generation of quality pipeline is key for the bank. And then lastly, the other key role of the facility was to deploy green financing. Now, the available green finances and those that we've started tapping into come in hard currency. But the lending from the bank's perspective or deployment is done in local currency. Matter of fact, about 70% of our loan portfolio is in local currency. Now, that really exposes us to forex risk. And the challenge is we cannot pass this to the final borrowers because our role is to provide concessional funding to the private sector, especially when it comes to the green financing. And so what happens is we have to stomach this and it shows up in our balance sheet. It remains a challenge. The would-be solution then would be hedging, but the costs associated with hedging is still high, and in our market it's offered by the commercial banks. A few challenges that I can mention is that commercial banks offer short tenors. So as a bank, our term loans go up to 15 years. But when you go to seek for, say, hedging solutions from commercial banks, they would want 1 or 2 years, swaps, and then keep rolling them over. That makes the cost pretty high. And then that's really not a tenable solution. So this solution here, or this instrument that we are proposing here, or that was funded, is to help hedge UDB's synthetic currency loans through a well-calibrated distribution of exchange rate risk between Uganda Development Bank, a hedge provider, and a well-capitalized or donor-capitalized guarantee fund. As the first step in this exercise or this initiative, it will be to establish a threshold using our historical data of currency or local exchange rate fluctuations. And then the guarantee fund will cover currency losses above that predetermined threshold. So that way, with hits that come with forex or currency depreciation, we will get these hedged and absorbed, and it will really help us cushion against these risks. This innovation or instrument comes at the right time for the bank as we seek to enhance our footprint in green financing in the country. But we think it will not only help UDB, it will also serve as an example to many other players and national development banks that play in this space and face similar challenges. Yeah, I do thank you and submit.
Now, Francis, this is super interesting because like this topic of FX hedges, no, is very prominent topic in the MDBs. We, including the heads of MDBs, have as one of the topics how to scale up solutions, no, FX solutions. And then we see here the synergies on MDBs and PDBs and trying to see, like we'll be really looking attentively now as you develop this. Now let me now pass to the African Development Bank and Hassatu. In your case, as a multilateral development bank, what are the challenges you face in expanding climate finance, and what actions are you taking to tackle those barriers?
Thank you very much, and good morning, everyone, and thank you very much for inviting the African Development Bank to intervene in this session. So, I mean, to us, climate change is extremely important because climate change exacerbates the development challenges that we are facing. I don't know if you can hear me well because I feel that there is an echo. I'm going to try and speak slowly. So climate change cannot be ignored if you want to have sustainable development. That is a fact. And if you look at the data from the Climate Policy Initiative 2023 report, the global climate finance has doubled from $653 billion in 2020 to $1.3 trillion in 2022. And out of this, Africa, which houses 9 out of the 10 most vulnerable countries to climate change in Africa, Africa received $30 billion. So we at the African Development Bank are committed to help Africa transition to green growth. And we do mainstream climate change in all our operations. So I needed to contextualize this. The needs are staggering. We're talking of needs of more than $100 billion per year. And obviously we are not there yet. And the reason why we're not there yet, it's, leads to the questions that is the root of the question that you've posed, is that there are many things, there are many aspects to that. First, and this is not just true for climate, but it's true for all the projects that are being implemented on the needs of the continent, is the lack of a strong pipeline of bankable projects. And that is a fact. It's something that is faced not just by the African Development Bank, but other MDBs as well. So the solution to that is project preparation facility, project development resources. And these are very, very hard to come by. We did, at the African Development Bank, we conceived and launched Africa 50, and one of the core objectives of Africa 50 is that, but still we're not there yet. So lack of strong pipeline of bankable project. Another problem is the fact that because of the volume of resources that are needed, this is not something that MDBs can do alone. So we need to mobilize the private sector at scale. If you look at Africa, Africa needs much more adaptation types of project than mitigation. And adaptation projects are usually low return, a bit complex to structure. So the interest from the private sector has been quite limited. Hence, you need to have instruments, to bring in instruments that are going to help either de-risk, because obviously there is that high perception of risk in Africa. So you need to bring instruments that de-risk the projects for the private sector to participate in. But you also need to be able to bring concessional resources or grants to the project, blended finance. You need also the public sector, the countries themselves, to be a participant. And then there you face the hurdles, the lack of fiscal space, the debt burden that these countries are experiencing. And then you might say, oh, but there are the vertical funds, huge volume of resources made available for exactly this. But the thing is, as I'm sure you know, is that Africa only accesses less than 3% of vertical funds. So again, what is needed there is more, we need to equip our countries to be able to access these funds. It's about grants, it's about capacity building. And we've launched what we call the Climate Action Window, where we have one of the objectives is to help African countries, low-income countries, access vertical funds. There is FX risk, obviously, which is one of the things that many of the private sector investors are saying, is a deterrent to them. And you talked about the initiative as part of the G20, but also beyond FX hedges, I think that we need to go towards the development of local currency capital markets. That is these solutions. So What we've done as well, we've launched what we call the Alliance for Green Infrastructure in Africa, AGIA, and which we champion in partnership with the Africa 50, with the African Union, ODA, NEPAD. And the objective is to catalyze bankable, greener infrastructure projects at scale. And the objective is to raise $500 million for early stage project development and project preparation capital, which aims to generate or the aim is to generate up to $10 billion in investment opportunities. And so far we receive about, I think we have like $180 million, still, quite good, but a lot to do on that front. We need to mobilize the private sector at scale. And what we've done, we've launched a hybrid capital transaction, sustainable hybrid capital that can be used to fund social projects and also climate projects. So with a transaction of $750 million, we're able to, to multiply the impact by 4. There is also Mission 300, which is an initiative that we conceived and that we launched with the World Bank and other MDBs. And the aim of Mission 300 is to provide access to electricity to 300 million people on the African continent by 2030. And there is a climate component to that. Hurdle, lack of carbon prices, effective carbon pricing market. Hurdle also is the lack of climate data. And here we're working with through a fund and to modernize Africa's climate and weather observation networks. So, I mean, there are many challenges that we are trying to tackle. But I think that one of the things that we need to look at, if we want to seriously tackle that beyond the private sector, because private sector is where you're going to get scale, is to be able to work together, because when we work in silos or semi-silo, we are not able to leverage on our strength. So it will bring together even more MDBs, public development banks, private sector, philanthropies, foundations, countries, in order to have one streamlined, targeted action plan of funding that is going to address those issues. The number of funds that exist throughout the world is just staggering. And small fund, larger funds, we need to bring them together in order to have impact and in order to be able to resolve this issue once and for all.
Assatou, thank you so much for such an eloquent picture that you provided there. Summarizing that, I think that we're in large agreement, and I am, on your perception on the lack of pipeline, that the volume is so hard, the size of the problem that we need private capital mobilization, the problem with adaptation in a context of a lack of how to finance adaptation in a context of lack of fiscal space, how to better now access the vertical funds. And one part that I particularly like and linked to the FX discussion is that, yes, finding FX hedging solutions and mechanisms, but not forgetting on the development of the local currency markets. Like we usually say in the MDB's discussions that while developing local currency markets is kind of it's the marathon. But we also need to speed, and then we need to have these solutions of FX hedging now to speed up the process as well. So they complement each other. So passing now, first of all, I need to thank the Children's Investment Fund Foundation for being a financial supporter of the FIX Lab. And in that context, let me ask Peter, from your perspective as a financial supporter of the FIX Lab, how do you envision the FIX Lab having impact going forward? And how is CIF working to support climate finance among public development banks?
Great, thanks. And yeah, it's a pleasure to be here alongside Louisa, Francis, Michael, of course, Assatou, and to hear about the innovations that they've been developing. As you said, I represent the Children's Investment Fund Foundation, so we're a philanthropic foundation focused on the lives of children globally, but doing that through focusing on climate climate and development, and as much as possible, trying to work in support of achieving systemic change. Yeah, we're here because we're delighted to support the Fix Lab, as you mentioned. Since its launch just last May, we've clearly seen it grow to be a really valuable forum and platform for sharing of insights, knowledge, and specific innovations amongst the National Public Development Bank community. I think as funders and philanthropies, it's clear we know national public development banks have a critical role to play in the provision of long-term catalytic local financing, but often it's tricky to know, well, what's the best way to support that also with modest funding, and we're really excited and feel like this Fix Lab is a great example of how to do that with practical steps, both on the convening and knowledge sharing side, but also on the innovation side. And so it's really exciting to hear about these instruments as well, and to see how they scale and how they develop and then can scale over the coming years. I mean, it's fantastic to see that they represent kind of the various functions that national public development banks can play, from the kind of market shaping side through to the funding and sustainable funding side, and then on the innovative kind of first mover product side as well. We're very delighted to see how these instruments develop, to hopefully see then the opportunity to scale and replicate. We think the Fix Lab has a fantastic role to play in doing that. I don't know if there are other funders in the room, but we'd welcome more funders to come on board and help this grow and scale further. We're very, very happy to do that, and look forward to further work.
Peter, thank you, and I'm sure that we are all super happy and grateful for you stepping in first, and indeed, like if we get others now stepping in, we'll be able to do scale this up. It would be a great idea. So we are almost in the end, but there is a key question to all of you. Very quick inputs, if you could, now as the winners now. But I would like to look forward. Looking forward as we plan, the Fix Lab is in implementation, as we saw. We have now the first round. But what other challenging issues of the SDG agenda can be addressed in the context of the Fix Lab, and to support public banks in promoting innovative solutions for climate? I would like if you could speak just in 1-2 minutes, give us some ideas so that we can take it forward. So let me start now, in a different order, with the African Development Bank. Asatu, please.
That's the wrong order. No, I did not think of a particular SDG, but I think much more around, because I was in a session this morning with philanthropies, and I think that we need to see how we can better integrate the work of philanthropies and MDBs and others in order to have impact. So it's not just one SDGs, but how can we work better together in order to enhance or improve our impact?
Excellent point, because it's a key topic that we are discussing this whole event. Now, how do we work as a system, and we are really leveraging each other, not the synergies. Peter, I'm going back to you, any ideas of other topics that we could explore?
I think obviously that's a key one, is how we can work with other actors in the system as philanthropies to seed the right kind of initiatives and moves forward. Otherwise, I think for the Fix Lab, it's getting that combination of working forward on issues that are, as people have said, relevant across a wide membership. Actually, there's a huge amount of similarities across the members. And what are the core issues that, if we can kind of level up across those institutions, actually there's huge opportunity for impact. As well as, I think, in the broader system, how do we support these institutions with low cost, long-term foundational support, financial support as a system. So whether that's partnerships between MDBs and NDBs, funding partnerships, or other ways in which we can crowd significant catalytic capital into these institutions, I think that would be a fantastic thing to think about.
Okay, and now we're reducing a lot of the fragmented and piecemeal approaches and get something which I think it's linked to the integration aspect, no? How we're more impactful and going. Luisa, going back to you as a winner, like what do you would like to see in the next round?
Well, regarding the financial instruments, I believe that the Fix Lab could help us by developing risk mitigation strategies. I think it's a core issue for all development banks, such as innovative guarantee mechanisms, insurance solutions. Another aspect that could be developed is impact monitoring tools. I think that as public development banks, usually we lack good impact monitoring tools, payment for environmental services solutions, and also cost reduction mechanisms.
Thank you very much, Luisa. And then Francis, what ideas you'd have?
Yeah, thank you. So we could seek to address one of the key constraints, if I speak specifically to green financing, generation of quality pipeline of fundable projects. So if you really look at this specific space, you'll find that mostly the private sector sometimes do not know, one, the criteria, also the differentiation of what is green and what is not green. And the use of the conventional approaches to financing of, say, demand-driven projects show up, present their ideas and concepts, and you find they may not work in this case, as well as how it would work generally. So I think if there is support to national development banks and other DFIs, it could be through project preparation funds, and this should really be concessional and blended where possible with grants. It can be concessional funding, but with grants to help us structure and prepare and support these projects, handhold them until they are able to run efficiently. So in this real, blended financing is very important, but concessionality of this financing is also key. Thank you.
Okay, a great point too, and resonates well with what Hassatu mentioned as obstacles, no? That perhaps we could find ways of being more efficient in that regard with this, no? Let's see how we innovate through the Fix Lab. And last but not the least, like Michael, please.
Yeah, I think we all agree that we need to be doing more in the preparation space. I think for us, one of the big questions that we need to ask is that a lot of the discussions have been around the conduit. So we talk of a guarantee, we talk of tenor extension, we talk of local currency. But I think the next space that we need to think about is to say, when we're looking at this problem and how we're solving it, is can you develop deeper markets? The world around us doesn't know man-made boundaries and man-made processes, and it responds differently. So can we develop deeper local markets, which then helps into the global flow? And I think off of the back of that, I think where we need to get a lot better at is there's been a lot of discussion around the conduit or the process, but ultimately we need to get to a point where I'll put it under the umbrella of the fixed direct investment flows in. So we need to get to the ultimate providers of the capital and the investment to find more comfort in making those hard investments. So whilst we've done a lot around the flow, we need to get the ultimate source of where the capital comes from. Thank you.
No, that's a great idea too, and a challenging thing that we should be tackling now if we want to be sustainable in resolving the problem. No? How you really build those markets. No? I wanted to we are basically now almost closing. I wanted to thank you all for this debate. Congratulate again the winners. No? Super interesting and projects. now we would welcome hearing back as we develop and seeing now the impact that it can deliver. I also thank Peter Asatu for joining us, and I thank you all for being present and participate in this debate. And also, this is the beginning of the FIX Lab, and we're really looking forward to the next FIX to be bringing much more. Now, thank you everyone for being here. Thank you.